and gentlemen, may I have your attention, please?
Good morning and welcome to another episode of Full Transparency Trading. First and foremost, let me get my big-headed self out of the way. Alright, that should do right there. As you can see, I got my vision board in the background. Let's minimize this. First and foremost, if you're tuning into my channel for the very first time, my name is Sebastian and I am a funded day trader. I trade futures. I used to trade options and slightly different futures and options, you know, something I'll go over at a later date. But right now we're going to get into something different. We're going to talk about some D&D. No, not Dungeons and Dragons. We're not going to go nerdy on you like that, but we're going to talk about some of the do's and don'ts of day trading these funded accounts. Now, what's my resume? Of course, you know, I can't just bring you over here and be like, oh yeah, I can show you guys how to do this or whatever. Actually, I'm going to take you into my real account. This is my real membership account back page. This is the dashboard. We're going to head over here to our signatures. This shows you how many accounts you've passed. And as you can see, I've passed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 different funded accounts. I started my very first funded account on 3/12. Actually, I think I started it about 3/5. I passed it on 3/12 and paid for it. The next one came April 1st, April 4th. We passed 2 on April 6th, 2 on April 10th, 2 on April 11th, 1 on April 12th, 2 on April 27th, 1 on April 29th, and then 4 most recently on the 1st of May. I went really heavy on the 1st of May copy trading, and I passed all 4 of these accounts at the exact same time. So it's not the most difficult thing in the world to do for the 50K account. My largest account so far is the 150K account that I passed on 4/10, but in that exact same day, I also passed a regular 50K account. So my suggestion first and foremost, especially for newer traders, is the 50K account. It has the best metrics and the payout to the goal is so much better. Trying to get $2,600 is so much easier than trying to get $5,000 that you need for the $150,000 account. And then I'm going to take you guys over to I don't have any more eval charts open. Actually, I think I might have one eval open still. So my one eval that I just started on yesterday, I made $43. And basically, I'm on my road to 20 accounts. You can have 20 of these accounts fully funded. And I'm trying to reach 20 accounts. I'm currently at 14. I have lost a few of the fully funded accounts. You know, early on, I lost my very first account and a couple of the middle accounts. Just being over aggressive, and that'll be in the do's and don'ts section. We'll talk about that. So yesterday on this account, I just started it and I basically just made a quick trade so that I can have my first day in, and then after that it'll be funded once I go in there and make the $3,000. So that's the goal. So let's go. Okay, so next we're gonna head over to the fully funded PA chart. And this is your PA chart. We're just going to show you one. When you're fully funded, they're all going to be over here on the right hand side. As you can see, in my first day of my fully funded account, I made $1,020. And then on the next day, I made $3,620. And I'll explain how that's possible when we go over to the chart. But it's honestly not incredibly difficult if you're managing your risk. I started out this day down $400. That's 2 day trades lost, right? And then I ended the day with $1,000. That's a better day trade. But we're not going to get into the how I make money right now. Right now is more about the do's and don'ts. So let's head over to Trading View. I'm not going to sit in this page. I'd rather show you a chart. So we're over here on Trading View. And this is where I do the vast majority of my trading. Or all of my trading, I should say. Since I no longer do options, I do all of my trading over here on Trading View. Now, when you're looking at the charts, we're going to just get right into the do's and don'ts. You don't worry about any of this stuff you're seeing on screen. This is just my chart. I could clear all these indicators. These are alerts right here. I can close out these alerts, but I want to leave them on to know when we cross those levels. So my first do is give it a try. You know the saying is nothing ventured, nothing gained. If you never try funded day trading or never try this in general, trying to trade futures or trying to trade options, if you don't put yourself out there and actually give it a try, you're never going to have any sort of success. No, you won't fail, but you won't succeed either. You know, You'll never reach your dreams if you're just passively sleeping on them at all times. And futures are very expensive, but if you use a funded account, then it's an inexpensive way for you to get in. The $50,000 account that I trade from cost me $37.40 per account, right? And then there's the added lifetime fee that I pay, because I wouldn't pay the monthly fee. I wouldn't suggest you do that. And of course, as always, this is not financial advice, but it's my best advice that I can give you as a 17 times funded day trader now. It costs $37 to get the evaluation account. Well worth it. The $150,000 account costs about $63.47. The only time I will purchase an account is when it is on sale for 80% or higher. The lifetime fee is $160. The account costs you $37.40, right, to do the evaluation. Once you pass, you pay your lifetime fee. So the initial investment per account is, let's just say $200. So let's say you've got your first account, you've got it funded, you've paid your fee, and now you have $2,600 in that account, or $3,000 just to be safe, right? You can now, on your first pay period, take out $2,000. So on the account that I'm going to take you into right now, as you can see, every day will not be perfect. And like I say, this is full transparency, guys. I'm going to let you see that, yeah, one of my accounts is down $994. That's perfectly fine, guys. I'll be able to make that back. I have an entire $1,600 left to work with before this account is even considered close to blown. On the most recent account that we started, we are up $4,600, which is very good. Here we are back on the chart. We're going to get to our first don't. And obviously, a don't that I've done a few times now is don't blow your account. This goes without saying. Okay, I've blown multiple accounts now. You get over aggressive, you over leverage, you just don't use a trailing stop, you know. I mean, you don't use a stop loss. There's plenty of ways to blow an account, but that's the number one rule for the don'ts, is don't blow the account. The next do is actually try to be a little more aggressive. Let's say you were thinking about getting into these and you were thinking about doing micros, right? Micro trades at $1.25 per contract. So let's just say I moved 1 point. 1 point's only going to give you, that's 11. Say I move 1 point. 1 point's only going to give you $1.25, right? So let's go up 8 points. 10 points will give you 12. That's a lot of movement for $12. You know, now if you're struggling with, you know, if you're in the beginning stages and you're struggling to actually, you know, trading micros is the way to go until you can learn and really get your footing, and then go over to the standard mini. But the standard mini single contract is perfectly fine. A single contract is $12.50 per tick. Let's say the average stock moves about $2 per 5 minutes. That'll get you $100 with just a $2 move, and $50 with just a $1 move. On a really good trade like these guys right here, this 3-minute candle, this is from 53 all the way up to 58. So you're talking about $500 there. If you get it from the bottom all the way to the top, obviously you're talking about $1,000 trade. And that's usually my goal. My goal is usually to find the bottom and then ride it all the way as high as I possibly can and take, you know, as close to $1,000 as possible. But on average, I'm only in a trade between 3 and 15 minutes. I don't like to sit around and trade way too long. If it's not going my way, or if it's not going my way at a decent speed, that means that I'm in consolidation, and I don't like to trade consolidation. So I'll take my profit and look for another setup. That brings us to the next don't overcomplicate things. There are a million trading strategies, and to be quite honest, I use the simplest possible strategy. I try to find the bottom, or as close to it as I can. I'll set my stop loss a decent amount below the bottom, $250, and put us right around down here. And then I try to ride that to the top, right? So I'll create what's called a demand zone. So let's say I'll come over here, I'll get my drawing tool, and I'll draw like a little line right there, and that's my demand zone, right? And then in my demand zone, I'll look to enter my trade about right there, right at the demand zone. When you're trading futures, it's easier to get in at the demand zone versus getting in, like it won't fall like it does with options. Sometimes you'll have like a big demand zone. So then I'll hop in at this line, and then I'll just start riding it up, and I'll let it go as far as it goes. Usually I'll get in down here, and I'll get out at this pullback. So I'll never capture this candle, just because a pullback can signal that either we're going to go fall further, or, you know, things just aren't going to go in my favor. So I'm not going to sit in a trade that may or may not go in my favor. Instead, I'll just take my guaranteed profit, and what is that, 53 all the way up to 56. And then if it got all the way up there, that's $500. Once it starts to pull back off to like 450, 400, I'll go ahead and close that out and take profit at $400. I'm never one to give back money. The reason that I would also do that is because you'll hit an even high at like 400 bucks right here. And then that'll be like, okay, cool, we're falling down. So then I wouldn't be a participant in this next candle, and that's perfectly fine. But also, I could re-enter off of this candle on that little bit of a pullback. It pulls back on the next one, I start to see it push up, and then I'll re-enter in that candle. And once we break this equal high right here, I'm like, okay, cool. It's either going to pull it down some more, which it did. It pulled down right there. And then I would get out when it started to pull back again. And from there to there, you made yourself another $200. So it's not super hard to make money. You don't have to overcomplicate this. You just have to learn how to read the chart. The next do, which is, you know, outside of the being more aggressive that I just told you guys, is take your time. There's no rush. There's no one has a gun to your head. You don't have to make these trades or you're going to die or anything like that, right? To, you know, not to be too morbid, but you can take your time with this. You have to trade for a full 10 days before you can even request a payment. And you can only request payments between the 1st and the 5th and the 15th through the 20th. So you don't even have to make all of your money in one time. Like a lot of my trades do come in one day, but that's because I'm targeting specific days or specific time frames. You can try to just get $200 a day. If you get $200 a day for 10 days, you've made $2,000, right? You now need $600 more to hit goal. There's only one day off, which is today, Saturday, that you actually can't trade. So you don't have to rush and try to get it all in one day. You can take your time. If you want to trade 3 days a week and go for the goal of $500 a day, $500 a day, 3 days a week, puts you at $1,500 a week, $3,000 every 2 weeks. That's your pay period right there. You know, if you want to do it like that. But there's plenty of ways to break it up, plenty of ways to take your time. If you're very, very new to day trading futures or trading in general, definitely stick to the micros and take your time just learning the process and getting familiar with all of the stuff that you're going to see. The next don't try too many systems. You need to simplify your trading as much as possible to have the highest level of success. In my opinion, you may be one of those people who needs to try everything before you figure it all out. And if that's the case, then that's perfectly fine. To each their own. For me personally, I like to simplify things into a system that I can work with relatively easily. So I won't try too many systems. I tried a few, they did not work. They lost me a lot of money. I quit using systems and I started using supply and demand trading as well as simple market structure. And that's pretty much for me all that I need. I'm going to continue to learn the systems just so that I can teach them, or I can know what they are or how they work, you know, or how they work in my favor or against me. But on average, I don't trade a lot of systems. There's no 2-1-2, there's no reversals. It's just a very simple when to get in, when to get out type of a system. I'm very happy using the 200 EMA as like a bouncing point. But let's get to the next do. The next do is very important, and that is have a profit target. You need to have a profit target because you need to know when's your exit point. If things are going your way, right? And you know, when is enough? What is enough? Is $100 enough? Is $200 enough? Like you see, I set my sights at -250 for my loss, $1,000 for my win. My average goal that I'm trying to reach on this account is 1% per day of the initial balance. The initial balance of my account is $50,000. 1% of that is $500. I think $500 is a very attainable goal considering how much you get with a 2-contract system. I'm getting $25 per 25 cents. I'm getting $100 per dollar. All I need a stock to do is move $1 in my favor, and I've already made $100. Once it moves $2 in my favor, I'm up $200. I can stop there if it seems like it's working against me and take profit at $200 and then look for another entry. And with futures, the awesome thing is there's always another entry, and then I'll enter in and try to get the second $200 to $250. Once I get the $200 and I get 2 of those, I'm at $400. Now I'm just trying to get $100. If I get $250, I'm done. You know, but getting a $1 move, finding yourself a $1 move on this chart will literally happen all day long. There's 61, there's 60, there's $200 right there. $200 in that little bitty candle. And that's just one candle. The next one, $200 to the downside. You can literally, don't do it all day long, but you can literally do it all day long. So have a profit target. The next don't goes right along with having a profit target. Don't try to hit your entire goal at once, because what's going to happen is you'll start to over leverage. You'll go in here with 10 contracts. Click, 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 click. And at 10 contracts, you're now risking $125 per 25 cents. So now your risk is $125 for every single 25-cent move. Literally, $1 is $500. If it goes against you $1, you have now lost $500. It's just a very, very dangerous way to play your account. And it's something that I really strongly advise against. Like, it's your money, do whatever you want to do with it. But I very strongly advise against it because it's so easy to blow an account. And I'll tell you why. Wicks. Wicks are liquidity grabs, right? You see these massive wicks. This stock may start going up in your favor, wick down, and that wick is from 57 to 55. That is almost $2,000. You've lost almost $2,000 from right here to right here. And now you're looking at a $500 trailing threshold. So what do? You panic and you try to go right back in with another very aggressive 10 contract trade, and then you blow the account. I've done it, so I know. That's how I blew my first account. I lost a bunch on trying to be really aggressive and get in with 10 contracts. I was like, if I can make, this much with 2 contracts, then obviously I can double, triple, quadruple that if I add 8 contracts or 10 contracts. And in theory, it is sound and it is correct, but you need more leverage before you can do that. At $2,500, I can leverage my account 10 times before ever blowing it, right? At $2,500 with 10 contracts, let's say I was to do 10, it's $1,250. It's half. It's half. You're leveraging half of your account's trailing threshold for one trade. That is super duper dangerous. And the likelihood is you're not going to make this $5,000 because that's a $6 move. The most likely thing is you're going to make about $1,500 max. And that's a $3 move. More likely than that, you're going to make $1,000. But look at how easily it can go against you versus how hard it is to hit your new goal. It's much easier to use a 2 contract system and just compound over time. You'll make more money, guys. You're going to make money hand over fist once you start to figure out the system. Once you start to figure out how this works, you'll start making money faster and faster. There's no need to be super duper over aggressive. These liquidity grabs can ruin your account in no time. Brings us to the next do. Do believe in yourself. Confidence is a large part of why I am successful. I am very confident in myself. I'm very confident that even if I lose, I can get it back. I'm very confident that I can push this thing as far as it'll go, especially after actually passing multiple accounts. Once you've passed multiple accounts, it's going to grow your confidence. Your confidence is obviously going to grow the better you do. Now, if I was down, like, I've blown 10 accounts now and I keep losing, obviously my confidence would be shaken. But I'm a naturally confident person and it just is what it is. Some of us are a little bit more anxious than others. I do have anxiety, but I'm also a very confident person. So even though I get anxious within the trades, I'm still confident that no matter what happens, win or lose, I'm going to be okay. And that's just experience. The next don't spiral when you lose. This is an important one right here, guys. So a bad habit of mine was spiraling when I would lose a trade. If I lose a trade, I lose $250. Let's say I lose real quick. Now I'm trying to hop in and go the other way. Then I lose some more money because it's actually still going. Now I'm trying to hop in and go the other way. Then I lose more money because it's still going. So then I'm like, oh snap, I've lost like $1,500. I've lost like $750 or whatever. So now all of a sudden I'm like, well, let me go ahead and just do max contracts, and then I'll try to get it all back at one time, and then I've blown an account, right? So don't spiral when you lose money. If you lose, take a second, step back, reset, reassess what you did wrong, figure out what you did right, and then go back into the market. Listen, look at all these chances to enter trades. This is what I want to drive home to you guys. Let's say you entered off of the pull-up right here. Boom. Boom. Okay, it pulls back. You get another chance to enter the trade right here. It takes you all the way up here. You get another chance to enter the trade to the downside right there. Pulls up a little bit. You can get in right here. There's going to be so many entries when you're trading futures. You can get in up here. You can get in down here. You can get in up here. You can get in down here. You can get in down here. You can get in up here. Same. Like I said, there's going to be so many trading opportunities. The key is to balance yourself and to, when you lose, just step back, figure out where the market's going, and then re-enter. If you enter in immediately, more than likely what's going to happen is you're either going to get in the middle of a play and you're going to lose more money, or you're going to get into the wrong direction and then you're going to hit your stop loss faster than you would have if you were just starting from the beginning or at odds. Because sometimes if you get in a trade down here, you're never going to hit your stop loss. It can go up and down the whole time. It doesn't matter to you. It's never going to hit your stop loss, and then you can just ride it all the way up. The next do, this is going to sound funny, but you have to get it out of the way. And the next do is try max contracts. It's going to be tempting until you try it. So if you see a really good play coming, you know, where you're going to hit at least $2-3 in one direction, try the max contracts. It's exhilarating as all get out, and which is why it's very dangerous as well, because once you tried it once, you're going to want to do it again, and you're going to want to do it again, and the odds start slipping out of your favor the more you do it. But do give it a try. Let's say you're up like $1,000 or whatever. You could risk that $1,000 on a play that you're very confident in, and you can max contract it. YOLO. Just one YOLO play, people. One. Not 10, not 20, not all of them. One YOLO play. Because you need to see what it feels like to either gain fast or lose fast from doing that. And until you see it, you're going to be curious about it. And more, you're going to want to do it. And you never want to do it at the wrong time, because the wrong time can blow your account. So do try max contracts at least once. The next don't is don't let your emotions run you. It's very hard to control your emotions when day trading in the beginning. You're going to have a lot of ups and downs. It's going to be topsy-turvy feeling. You're going to get down on yourself because you lost a trade that you thought you were right about. You're going to get out of a trade early just to see that it ran for like an hour and could have made you like thousands of dollars. There's going to be so many just emotional wear and tear that happens during the course of a trading day that you really need to learn not to get down on yourself emotionally. I used to beat myself up in the beginning. Now I'm just like, okay, it's just the cost of doing business. You lose a little bit of money, you reset, you get back in, you make a little bit of money, and then you try to make more money than you lose. And that's the goal at the end of the day, is to make way more than you lose. Minimize your risk so that you lose very little and try to gain as much as possible. Like I said, the goal for me is to try to get $1,000. I'm minimizing my risk to $250. But even when I'm losing, I won't just wait for it to get down to $250. If it goes down $1 or $2, I'll just get out and just take my $150 loss or $100 loss. You have to learn to accept loss when day trading. The next do add to your wins. Oh, this is such a beautiful, beautiful thing. So when I'm winning a trade, right? Let's say I'm up like $250, and we start to see, I want a better one than this one right here, because that's a massive pullback. On average, you're going to get like a little pullback like this. So let's say I'm winning a trade. It gets up to right there. I get a little pullback to right here. Right here, I'll add 2 more contracts. Now I'm doubling my profit the whole way up. Okay, let's say I get another pullback to right here, but it starts to go back up. I'll add in 2 more contracts. Once we break this level, pull back to right here, break that level, I add 2 more contracts. Might pull back a little bit, but as long as you never come back down below this one, you're good. So you've added 2 more contracts. It's going up. It's going up. Pulls down there, kicks you out, but you've made extra money. I'm up to 6 contracts now, so each contract is now worth $75, and it's just going up. Contracts. So that is a way that you can get to the maximum amount of contracts. You're keeping the exact same risk, the $250 risk. So the new contract is at the exact same risk level as the previous contract, and they're all starting higher and higher. And then at the same time, you're sliding up all of those stop losses. So eventually all of your stop losses are going to equal out at a level like right here. And then it's just climbing from there. And if it ever pulls back down to that level, then you get kicked out. But you've made so much more money. So add to your wins. When you're winning a trade, add to that win. Next don't is perfect, because we're talking about moving your stop loss. Don't put your stop loss too tight. Don't be like, I'm going to go in with a $75 stop loss and I'm going to make $1,000. No, what's going to happen is it's going to wick down a little bit. It's 75 cents and you're going to get kicked out of your trade. You're going to lose $75. You're going to get right back in. You're going to lose $75 again. Now you're down 150. You're going to get right back in. You're going to lose another $75. And it's just going to keep going and going and going going until you realize that you need to put your stop loss further away. Your stop loss needs to almost be invalid. You know, I can't get to the point right now where I can put my stop loss where it would be invalid because that's too much into my trailing threshold. On this current account right here, I can do that. But on average, $250 is more than a decent stop loss if you're getting in at the right times. If you're getting it at an A entry or a B entry, $250 shouldn't be hit. That's pretty much it for like some of the early do's and don'ts. Another do is do treat this like a business. If you treat this like a business, you're going to have much more success. You wouldn't just go into your business gambling every single day and hoping for the best. You're going to have some sort of a strategy. You're going to have some sort of a plan, and you're going to do your best to make sure that you end the week in the green. Another don't is don't let a bad day eat at you. You know, you're not every day is going to be super perfect here or whatever. If you have a really poor day, and let's say you lose like 3 trades for $250 a piece, that's okay. You still have plenty of trailing threshold left. You still have plenty of days to refresh. You don't have to trade the next day. Linked in my video is my discount code, 80% off with 1 day to pass using my affiliate code down low. So they're not paying me at all to say this. I just really enjoy the Apex Trader funding type of system. I think it's very simple. I think it's very fair. I like it a lot, guys. And you see how much it would cost if you were to buy like the $50,000 account straight cash. You're talking about $167 a month versus $37 a month. The same for the Tradovate. I greatly prefer Tradovate over Rhythmic. You guys know how I feel about that, so I definitely suggest Tradovate. You guys know the motto, man. Get out there and take the easy money, the low-hanging fruit, guys. If you're taking the easy money, you're not gonna lose that often. It's okay to take profit. You know, the reason I take profit is because if you take green, you can't go red. You guys have a great day. Thank you so much for checking out the video, and for all the likes, the subscribes. Listen, if you have any questions or comments, leave them in the comment section. I'll try to answer them in a later video if I don't answer them in the comment section. You guys have a good day.